when you start to invest in anything, you got to make sure you have contingencies. And then you have to have contingencies for your contingencies. Now, people have been talking about the housing market crashing for the last 5, 10, 15 years. People are like, I hope the housing market crashes. And they're like, everybody's going to be underwater. And there's all this fear mongering. And the reality of it is, the housing market isn't going to crash. It's based on supply and demand. Last time the housing market crashed is when the supply was extremely high and the demand was low. Right now, the demand is high. Even during COVID, the demand was high. And so it's simply not going to happen. But let's play this game. Let's say that the housing market does crash, which for me as an investor, I want the market to crash, because the reality of it is the market crashing and the prices going down actually benefits me in the long run, because it allows me to buy properties at a cheaper prices. And then when the housing prices go back up, I can then either rent them out or resell them at a higher value. So that's the first thing. The second thing is I have contingencies and backups. Now, not every investor does this. Some people take too many risks and don't mitigate the risk. So now how can you mitigate your risk if, let's say, the housing market crashes? Well, first of all of my properties cash flow at a pretty significant value per property. Now, as long as people continue to rent, they will cover that, and I will make that surplus of cash flow. Now, let's say half of my units are empty. If half